Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Market Reporter at Nasdaq. Joining me is Uri Gruenbaum. He's the founder and CEO of TipRanks, which tracks, analyzes, and ranks performance of analyst stock recommendation and also powers Nasdaq.com's smart portfolio tool. Uri, welcome to Trade Talks. It's great to have you with us.
Thank you, Jill. It's great to be here.
All right, now let's talk about analyst performance benchmarked to the S&P and top 100 analysts compared to all analysts. What is the methodology and what are you trying to extract from this?
So when we look at the performance of analysts, we basically look at three factors. What is the average return of every recommendation an analyst makes? What are the success rates of analysts, meaning how many of their recommendations have actually generated positive returns? And the third part is the significancy of the data. We can't tell a lot about analysts that have 5 recommendations, but we know a lot about analysts that have 500 recommendations. And so basically we factor all these 3 parameters and we rank these analysts based on them.
All right, now let's take a look at the list of the top 5 performing analysts over the last 10 years.
So over the last 10 years, we can see that number 1 analyst is an analyst from Piper Sandler called Brent Bracelin, who has a success rate of 83%. This basically means that 83% of his recommendations have generated positive returns, which is remarkable. And on average, every recommendation that he gave generated an average of 35.7% in the following 12 months. Number 2 is Joseph Foresi from Cantor Fitzgerald with an 82% success rate and an average return of 23.3. Number 3 is Brian Schwartz from Oppenheimer with a success rate of 79% and an average return of 30%. Number 4 is Glenn Green, also from Oppenheimer, with a success rate of 82% and an average return of 21. And the 5th one on the all-time top performing analyst is Quinn Bolton from Needham with a success rate of 77% and an average return of 30%. Now, what's common to all these analysts is that they all cover the technology sector, which, as we know, has outperformed most of the other sectors. So it isn't really a coincidence that these are the top performing analysts, and opposed to analysts that cover the healthcare or real estate sectors. What's also common to all these analysts that you will notice that they all come from tier 2 and tier 3 research firms, and we were trying to understand why the top 25 analysts on our list, it's almost impossible to see analysts from Goldman Sachs and some of the big banks out there. And what we found is kind of interesting. We see that when you look at the top 10 banks, the JP Morgans of the world, the way that their ratings are distributed is that about 15 to 20% of their ratings are going to be sell or underperform. And, then you have about 40% neutral and another 40% buy recommendations. When you start looking at the independent research firms or, the tier 2, tier 3 investment banks, you can see that they're actually much more bullish. They only have 5 to 7% of their recommendations are going to be sell, while the vast majority are going to be strong buy recommendations. And when the market is bullish,
that's not a surprise to me because they're going to put buy ratings on it to get access to corporate management. That's how it works on the sell side. But let's move on, Uri. Let's move on. So average financial blogs performance, and I'm sure there's a lot to look at there. It seems like everybody has a blog these days.
Right, so it's actually kind of interesting. If you look at the big financial blogs that are out there, all the Motley Fools and Seeking Alphas of the world, these websites are getting about 100 million visitors every month. And these visitors are exposed to recommendations made by financial bloggers, and these recommendations are very actionable. And every individual investors are very responsive to the content online. Now, what we found when looking at financial bloggers is that an average recommendation, the average return on a blog recommendation would be about 4%. If you compare it to the S&P, you would actually lose 3.6%. This means that if you went online and you realize that here is someone that is telling you what to buy, you'd be better off simply buying the one of the indexes. If you look at the top 10 bloggers, this means that we go back 10 years and every recommendation made by those that have been at the top 10, you would have made an average return of 27% or about 23% above the S&P. But this is, the top 10 out of 6,000 financial
All right.
markets.
All right, let's wrap up here. We have just about a minute to go. Let's talk about the 5 most recommended stocks by the top performing analysts for the third quarter.
Sure. So if you look at, the top 10% of the analysts and search for the stocks that have been most recommended by them, number 1 is Moderna, which is probably the most trending stocks these days, especially today, after the successful
The positive data that came out, yeah.
Yeah, from phase 1. After that, we have Uber. Then we have Alibaba, followed by DraftKings and Vroom, which is both DraftKings and Vroom are kind of new. They've been listed in the last few weeks.
All right, great stuff. So interesting, Uri. Thanks so much for joining us on Trade Talks.
My pleasure. Thanks a lot.
And you got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.